If you're trading Forex and you're not keeping an eye on economic indicators, you might as well be trading blind. These indicators move the markets, they shape currency trends, and can cause massive volatility. Today, we're diving into the top 5 economic indicators that every Forex trader must watch. This is FX Limit, and let's get right into it. First up, we've got the Non-Farm Payrolls Report, the NFP. Released monthly by the U.S. Bureau of Labor Statistics, this report shows the number of jobs added in the U.S. economy, excluding farm workers and a few other categories. Why is this important? Because job growth signals a strong economy, and a strong economy can lead to a stronger dollar. When the NFP data is released, it often causes massive spikes in price action, especially on USD pairs. Smart traders plan ahead, use risk controls, and avoid over-leveraging just before release time. Tools like the Apex Trend Indicator can help by scanning the trend across multiple pairs and showing where the momentum is likely to shift, no second guessing. Next, we have GDP Gross Domestic Product. This measures the total value of all goods and services produced by a country. Strong GDP growth suggests a healthy economy, which typically leads to currency appreciation. The US, Eurozone, UK, and other major economies release their GDP data quarterly. Traders analyze the actual figures versus forecasts. A higher than expected number can spike the currency, while a disappointing figure might send it tumbling. If you're unsure how a currency pair has reacted historically to GDP releases, indicators that provide signal statistics like the Apex Trend Indicator can show the performance before and after major events, helping you understand which strategies are working. Third, let's talk about interest rates. Central banks use interest rate decisions to control inflation and stimulate or cool down their economies. When a central bank raises interest rates, it usually strengthens the currency. Higher yields attract investors. Conversely, rate cuts often weaken a currency. The Federal Reserve, ECB, Bank of England, and Bank of Japan are especially influential. You don't need to predict what they'll do, but you must be aware of their announcements. Before a rate decision, check what your trading tools are showing. For example, if the Apex scanner is flashing a new trend just as a central bank is about to announce, that's your cue to tighten your stop losses or wait for confirmation before entering. Coming in at number 4 is the Consumer Price Index, CPI. This measures inflation by tracking the price change of goods and services. Rising CPI indicates increasing inflation, and if it climbs too fast, central banks might hike interest rates to cool things down. This can cause rapid movements in currency markets. Traders monitor this data to anticipate central bank action. Again, pairing this with a high accuracy trend detection tool can give you an edge. Imagine knowing the likely direction before the market fully reacts. That's where signal-based systems that don't repaint become game changers. And finally, the 5th must-watch economic indicator is the Purchasing Managers' Index, PMI. This forward-looking report tells us how businesses view the economy. Are they expanding, hiring, investing in more inventory? If PMI is above 50, that's generally good news. Below 50, not so much. Since this data often comes out before official GDP or employment figures, it can give traders an early read on market direction. Combine it with a dynamic indicator that adjusts stop losses and take profits automatically, and you're ahead of the game. Now, economic indicators are just one side of the equation. Knowing when to trade is just as important as knowing what to trade. That's where tools like the FX Limit Apex Trend Indicator can really shine. It simplifies your decision-making with non-repainting buy and sell signals, shows trend direction instantly with colored lines, and even calculates take profits and stop losses for you. Whether you're looking at H1, H4, or daily charts, having that extra confirmation can make all the difference, especially around high-impact news. So next time you mark your calendar for an economic release, make sure your charts are telling you the full story, because when price action meets preparation, that's where opportunity lives. Thanks for watching FX Limit. If you found this helpful, subscribe for more trading insights. Stay smart, trade safe, and remember, trend is your friend, especially when you can see it coming.